Support from remittances. This editorial highlights how remittances from overseas Pakistanis support the economy, but warns against long-term dependence on them. Even though workers' remittances dipped, albeit negligibly, in January on a month-over-month basis, the earnings that overseas Pakistanis send home continue to help the country's current account stay in the positive zone. Remittances are money sent home by Pakistanis working abroad. Dipped, albeit negligibly, means they decreased slightly, but not significantly. Month-over-month basis means comparing one month's data with the previous month's. Current account refers to a country's balance of trade, meaning its earnings and expenses from foreign transactions. Stay in the positive zone means avoiding a deficit and maintaining a surplus. That remittances are helping the current account run a surplus month after month amid a widening trade deficit and dwindling foreign official and private inflows shows the economy's reliance on the cash sent back by Pakistanis abroad. Run a surplus means earning more than spending. Widening trade deficit means the gap between imports and exports is growing, with imports exceeding exports. Dwindling foreign official and private inflows means that both government and private foreign investments or financial aid are decreasing. Economy's reliance means Pakistan depends heavily on remittances for financial stability. According to a brokerage company, remittances have been instrumental in delivering a current account surplus in 8 out of the last 12 months, despite rising exports. Brokerage company refers to a financial firm that analyzes economic trends. Instrumental means playing a key role. Despite rising exports means that even though exports have increased, remittances are still the main reason for a surplus. The inflows have also been a key factor behind the stable exchange rate. Inflows refer to the money coming into the country from remittances. Stable exchange rate means the value of the Pakistani rupee has remained steady against foreign currencies. Data shows that monthly remittances have averaged $3 billion per month, a significant increase from the $3.4 billion monthly average seen in FY23 and the better part of FY24 since March. Averaged $3 billion per month means the amount of money sent home has been around $3 billion every month. Significant increase means a noticeable rise compared to previous years. FY23 and FY24 refer to the financial years 2022 to 23 and 2023 to 24. Cumulatively, remittances soared to $20.8 billion in the first 7 months of the current fiscal year, up by nearly 32% from a year ago. Cumulatively means the total amount over time. Soared means increased rapidly. Fiscal year refers to the government's accounting period. Up by nearly 32% means an increase of about 32% compared to the previous year. The growth is led by an increase of 42% in flows from the UAE and Saudi Arabia. Led by an increase of 42% means the biggest rise in remittances came from workers in the UAE and Saudi Arabia. A crackdown on the grey dollar trade, reduced political and economic volatility, a stable exchange rate and forex market reforms are the major reasons for the robust remittance growth. Crackdown on the grey dollar trade means strict action against illegal money exchanges. Reduced political and economic volatility means the country is experiencing fewer political and economic disruptions. Forex market reforms refer to changes in the foreign exchange system to improve stability. Robust remittance growth means a strong and steady rise in remittances. Last but not least, IT firms, along with IT professionals, relocating to Dubai and elsewhere due to curbs on the internet is another reason for the rising remittances. Last but not least introduces the final but important reason. IT firms and professionals relocating means Pakistani tech companies and workers are moving abroad. Curbs on the internet refers to restrictions on online services, which have forced businesses to shift to other countries. The State Bank expects the current fiscal year to close with a record $35 billion in remittances compared to last year's $30.25 billion. and the current account to end in a surplus that is 0.5 PC of the size of the economy, thanks to overseas workers. State Bank refers to Pakistan's Central Financial Authority. Record $35 billion in remittances means this will be the highest amount of money sent by overseas Pakistanis in a single year. 0.5 PC of the size of the economy means the surplus will be equal to 0.5% of the country's total economic output. However, overdependence on remittances for a longer period can prove risky for balance of payments stability. Overdependence means relying too much on something. Balance of payments stability refers to maintaining a healthy financial position in international trade and transactions. Such risks can be curtailed only through a rapid boost in export earnings to finance imports, rather than using inflows from remittances. Curtail means to reduce or control. Rapid boost in export earnings means increasing the country's income from exports quickly. Finance imports means paying for the goods and services bought from other countries.